What type of transactions would work at the moment?
What we see is that doing a continuation vehicle enable better exit proceeds that if you were going to sell it in an M&A route.
Charles, thank you very much for being here. We are in London talking about investments in Europe, fundraising. But before we talk about the topics, I want you to introduce yourself and talk a little bit more about your role at UBS, please.
Sure. Thanks a lot, Gustavo, for having me. So Charles Favard, I lead the private funds group real estate team at UBS Investment Bank. What our team does is to raise capital for third-party managers in the form of funds, separate managed accounts, joint ventures. What we do a lot of is continuation vehicles. So we're market leader in Europe on that continuation vehicle segment.
Talk about these continuation vehicles. Why are they so appealing for some players, as I hear here at the event?
So there's a few forces here that are emotions. One is from the LP community, typically the assets that are being recapitalized into continuation vehicles are the best assets of a manager. That's the only way. So those are the crown jewels that the manager would like to keep because they see a growth path. They see that it's very difficult to replicate, right? And so for an LP standpoint, it's typically also an asset that they'd like to stay exposed to. Maybe not 100%. So the beauty is that a continuation vehicle gives them an ability to decide if they want to roll over their position or they want a partial rollover, crystallize, part of their proceeds to invest elsewhere, but they have the option, right? So that typically the LPs quite like that from that standpoint. From the GP is because they want to keep it, they want to grow it, they see a better potential, and they want to raise capital to redeem the investors that want out, but also they want to raise additional capital to fund the growth, right? And go from B to C or D, right? As opposed to going back to scratch to fund a new platform again.
And when it comes to capital raising nowadays, which asset classes or which sectors are attracting most interest from the investors?
So sector-wise, a lot in living. So we've seen a huge amount of appetite in living. Typically in living has been around PBSA, where we've been very active in Spain, in the UK, in the student housing segment, in the Nordics, in elderly care. That has been very successful as well. So everything related with a bad, undersupplied market and an ability to pass through inflation. Then we also involve on residential. There are very exciting strategies today in Germany, in Ireland, in the residential market. And then I guess outside of living, we've been looking at and working on data center. That has also been obviously a key market in vogue, in demand from LPs who have little to no exposure to that asset class.
And when it comes to transactions, the volumes are quite low at the moment. What type of transactions would work at the moment? What do you see in the marketplace?
So when we go to manager to talk about liquidity options, where you have an M&A, do I do a straight sale of the portfolio? Do I IPO? Or do I do a continuation vehicle? Now, straight sale, if it's a large portfolio above $1 billion, $1.5 billion, typically there's a handful of buyers, right? And they make you feel this way, i.e. they price that in. So what we see is that doing a continuation vehicle enable better exit proceeds that if you were going to sell it in an M&A route. Reason for this is because in a continuation vehicle format, we sell to the marketplace clips of 25, 50, 100 million equity check, as opposed to having to put on the table $500 million of equity to buy a 1 billion, say, GAF portfolio. So selling smaller tickets is more absorbable by the market, if you will, less scary at a time where there's a lot of uncertainty in the market to invest a smaller ticket as opposed to put a big bet at one point in time. Mm-hmm. So that's why we see a lot of demand for contribution vehicle, smaller equity size.
Makes sense. Now let's talk about major trends. Looking ahead, the next 12 months or 2026, what are the major trends you see in the real estate industry?
So we see a lot of what we saw 12 to 18 months ago as a lot of LPs telling us we only do credit, because why would I do an equity trade when the credit trade is giving me better return with better protection? I think that trade is now tailing off, right? And we see LPs pivoting towards more of an equity play. So that's one pivot that I think is gaining momentum, right? Cost of debt is cheaper, right? Debt is now accretive, and equity has repriced to a lower base. So it feels like it's a good time to enter the market. And that this year has been a lot stronger from a capital raising standpoint than last year. And we see that momentum continue to grow.